Thank you. I really appreciate the indulgence of a quick second round. I have two questions. One's for Mr. Stivers. A lot of the panelists here seem to ignore the 2010 rule changes that changed the investment criteria for money market mutual funds, thus making them more stable. Can you just spend maybe 30 seconds talking about why that's important when you limit what they can invest in and how that keeps the stable net asset value a viable way to go?
Thank you, Congressman. What the rules did is impose a whole set of heightened risk-limiting conditions on money market funds, and they were almost immediately tested in 2011 during the crisis in the Eurozone and at the time of the debt ceiling controversy and the downgrade by one of the ratings agencies of U.S. government securities.
Great.
We came through that fine in part because of the 2010 amendments.
Thank you. And I only have a little bit of time. I also want to give Ms. Chandaha a chance. I'm kind of scratching my head with your position because it appears to me your position is that floating net asset value is great, except where it affects you. You like the exemption on government funds, and you happen to have the biggest government fund in the country, and you want a retail exemption, and 99% of your customers are retail. So help me understand how you sort of put that together, that you like a floating NAV, but not where it affects you. You want the exemption.
Well, certainly our clients are retail investors, and what we appreciate with the SEC's review is that they focused in on where the potential risks lie in the money fund industry. We do believe that regulation should focus in on where the risks lie and not necessarily be a one-size-fits-all approach. So that does benefit us, but we do think that retail investors did not run. They are very stable investors, and that retail investors should be segregated from institutional investors who do have the ability to run and move assets more quickly.
Thank you, Ms. Chandaha.
Thank you, and thank you, Mr. Chairman. I yield back.